Welcome to Luca and Miguel. Enjoy the video.
In this video, I will explain how to make a ledger and journal. We'll start by understanding the general journal, which is your initial record of all financial transactions. Think of it as a diary for your business's money. Each entry captures essential details like the date, the specific accounts involved, and whether it's a debit or a credit. Recording transactions chronologically ensures a clear and organized financial history. Now, let's dive into crafting those journal entries. For every transaction, you'll first identify the specific accounts that are impacted. Then, you'll decide whether each account is increasing or decreasing, which dictates if it's a debit or a credit. Remember the golden rule: total debits must always equal total credits. This fundamental principle ensures your accounting equation remains perfectly balanced. Once transactions are recorded in the journal, the next step is to transfer them to the general ledger. The ledger acts as a collection of individual accounts, providing a summary of all activity for each one. You'll post the debit and credit amounts from your journal entries into their corresponding ledger accounts. This process allows you to see the running balance for every account, offering a clear financial snapshot. Finally, let's walk through the posting process. For each journal entry, you'll take the debit and credit amounts and transfer them to their respective accounts within the general ledger. After each transfer, make sure to update the balance of that specific ledger account. This systematic posting ensures that your ledger accurately reflects all financial movements, giving you a comprehensive and detailed history for every account.
Thanks for watching and please subscribe. It's the best investment you'll ever make.